Robin Hood is probably one of the best-known characters of English folklore. His name is often used to describe someone who works against tyranny. A Robin Hood character is someone who robs the rich to feed the poor. Well, if we were ever in need of a Robin Hood for the modern age, then now couldn't be a better time. And luckily for you, we have the very person. Today, Gregory Mannarino joins Dave Russell on GoldCore TV. Once described as the Robin Hood of Wall Street, Gregory is a full-time trader of the capital markets with a huge global following. His YouTube channel has amassed a whopping 78 million views. This is a man who will tell you like it is and provide plenty of lessons and tips along the way. Dave's short but punchy chat with Gregory covers the US debt market, Fed hikes, gold and silver prices, as well as sheer frustration with the absolute carnage policymakers seem to be happy to wreak on market participants. Their conversation will no doubt have you all fired up and demanding more. So why not subscribe to GoldCore TV and check out the rest of our interviews with market experts and financial commentators. And don't forget to let us know what you think of our chat with the Robin Hood of Wall Street in the comments below. But for now, enjoy our interview with Gregory Mannarino.
Gregory Mannarino, welcome to GoldCore TV.
Thanks for having me. I greatly appreciate it. And I am very happy to be here.
I'm really looking forward to this. I'm going to start by asking you, we've got PPI soaring, we've got CPI soaring, we've got the dollar soaring, we've got rates soaring, and we've got geopolitical tension soaring. Now, if you were to turn on the mainstream financial news, you wouldn't see people that are panicking over an impending crisis. Now, is there something that we're not getting, or are they deliberately ignoring the freight train that's coming down the track?
Well, what's their job? Their job is, in my opinion, to keep people under control, propagandized, obviously to get them to not focus on anything that's truthful. It's always the same story. It's a distraction. It's look here, don't look over there. Try to keep the population of the world lulled into some kind of sense of normalcy in an absolutely out of control situation. But the bottom line is, this is all deliberate. I mean, there's no doubt about it. You have central banks running wild here, selling a lie to the people of the world here that by raising rates miraculously at one point, we're going to start to see inflation come down. It hasn't worked. It's ineffective. It will not work. It's not even meant to work. If the Fed really wanted to control inflation along with other central banks, well, they do have a tool to do that, and no one's talking about it. And that is to raise the capital requirements of the banks, what they're supposed to should keep in reserve here. We're at zero. The banks are not required to keep it. What we got to do is contract the money supply. Look, this is just a big distraction, and again, it's this issue with inflation is really. It's not a rate problem. It's a currency free fall problem. Henceforth, why I've been telling people for years to bet against the debt, become your own central bank, hold hard assets, physical silver, my favorite asset of all freaking time. This is what people need to do. Bet against the situation, which is a debt hyper bubble, and it's getting mainstream attention that there's problems here. Even Janet Yellen just late yesterday admitted there's a problem with liquidity in the debt market, something I've been screaming about from rooftops for a long, long time. It's about damn time, if you ask me, that at least we're getting some truth out of the mainstream propaganda ministries, which I call them every freaking day. Look, I think people, at least I would hope, that people that follow our work, yours work and my work here, are a little more educated and understanding what's actually going on. This is a collapse, a deliberate attempt, and it's very successful, to destroy the global economy, to bring the world to its knees, to allow central banks to take over, become the one world government. Excuse me. We've all been spoken about for years. Told about for years, it's unfolding right before our eyes. So what do people need to do? They need to put themselves in the right spots here. Like I've been telling people since day one, bet against the debt, become your own central bank. You do this by holding hard assets, physical silver, again, my favorite of all time. I love gold. I own it. Platinum, palladium, I own them too. But I think if you just look at, and why would I say that? Why does Greg Mannarino push his thought process that he believes that silver is the most undervalued asset. It's very simple. You look at the Dow gold ratio, you look at the gold silver ratio, and you can see just by this little math here that silver is the most undervalued asset here. Historically, we're so outside of the norm with regard to these ratios that at one point it's going to normalize. And I believe at one point we will be getting a massive drop in stock prices. And again, don't focus on the stock market. Look at the debt market, which is the driver. Global bonds are selling off, yields are spiking. This is the exact scenario I warned would happen from a decade ago. And we're starting to see it unfold very rapidly. A meltdown in the debt market will crush the stock market. Cash is just going to move. It doesn't grow money wings and fly away. It's going to go into commodities, in my view.
And I just want to go back to something that you said there, and that is the tool that the central bankers have, if they really wanted to get inflation under control, is to tinker with the reserves. Now, you said that raising interest rates really isn't going to get inflation under control. Why do you believe that is so?
Well, I mean, look at the mechanism. What does it do? What is it meant to do? Okay, for central banks raising rates basically destroys demand. That's what it's designed to do. Henceforth, destroy the economy along with it, suck people down with it. It's not designed to control inflation. And if it were, we haven't seen the effect of it yet. We've had central banks around the world, the Fed, raising rates for many months now, completely ineffective. We got these reports this morning. Inflation continues to surge out of control. Oh, big surprise. No one saw that coming. How about, I bet every single one of my subscribers and yours as well saw this coming, okay? Look, what they need to do is just control the money supply. It's vast. Let me show you something. Let me see if I still have this. This is right off of the Federal Reserve's own website. That's the money supply.
Wow.
Okay. That I added this red arrow here. But if we could control this, okay, I've been telling people that if central banks really want to stop inflation, they got to stabilize the currency. They can stabilize the currency by contracting the money supply, require banks to hold larger reserves than zero. Okay, we're at zero right now. But look, you'll never hear this from a mainstream propaganda ministry show or a politician or brain dead presidents or whoever it might be. No, but this is the truth. We could, if central banks were really serious about stopping inflation in its tracks today, they should be raising the reserve requirements, contracting the money supply, and that would have an immediate effect. Not this whatever some kind of lag effect that people are hoping for. Oh, central banks, they're serious about controlling inflation. No, they're not. They have no intention at all to stop this expansive monetary policy. There's no quantitative tightening. We have, again, this chart here is proof of what's going on. It's unbelievable. But look, people are being kept in the dark. They're never going to be shown a chart like that on the mainstream. That's right off the Fed's own website. So that's the story here. This issue of raising rates, and I've told people this since day one, it would not work. It's not meant to work. It's just meant to, again, destroy demand, bring the economy down with it here. What did we just hear? Fed President Evans, he doesn't even care if it costs people their jobs. And of course it will, because that's what it's designed to do. You want to stop inflation? Raise reserve requirements of the banks immediately, but they won't do it. It will stop them from fulfilling their end game, that is to continue to inflate.
We're heading towards a situation where something is going to break, and we're getting closer and closer to that point. One of the things, while researching for this interview, the MMRI, the Mannarino Market Risk Indicator, you've got that at quite extreme levels, 281. Can you explain to people what the MMRI is, how it's calculated, and what a score of 281 actually means?
When I first introduced the MMRI, okay, we were in the 80s. The level was in the 80s. The market was off to the races. Everything was looking really pretty. What the MMRI is, it looks at basically credit risk based on inflating debt for the most part here. It looks at the 10-year yield. It takes the relative strength of the dollar, puts it in a little equation here, and it comes up with a neat little number, which is color-coded right on my website, traderschoice.net. It's free to everybody. And right now, we are in very high risk. Over 300 becomes extreme risk. Now, I mean, look how it's played out. As the MMRI has risen, we've seen this issue with instability in the debt market. We've seen stocks fall under pressure. I mean, I think it's probably the best risk indicator. That's what, it's not a crash indicator. It measures risk in the market. And I think there's nothing like it. I think it's the best indicator out there. And again, it's free to everyone. I don't want to ask anything for it. Just, I want people to utilize the resource and watch how it plays out and how stocks respond to it. What people need to understand, and I've been telling people this, I don't know how long now, is the stock market is not an independent entity of itself. In this environment, forward guidance, PE ratios, earnings, it doesn't matter. It's all based upon debt. The debt market is the driver. So what does that mean? That means that the stock market is deriving value from what's occurring in the debt market. So the stock market in aggregate is a derivative. It becomes a derivative of action in the debt market. And we are seeing instability here in the debt market. And it's not just Greg Mannarino saying this anymore. It is getting mainstream coverage here. You got the IMF warning about it, the World Bank warning about it. Now, Janet Yellen, I couldn't believe, I almost fell over, because Janet Yellen's been telling everyone for weeks now, oh, the financial system is fine. There's no problems here. Now, all of a sudden, she changed the tune. It's kind of interesting to me. I wonder why she just all of a sudden is now saying there's issue here in the debt market. What was her exact? I actually wrote this down here. Janet Yellen, who said several times over the past few weeks the financial system was stable, is now concerned about liquidity in the debt market. Unfreaking believable here. When they change their tune like that, you have to wonder why. I don't know. Sometimes you get these little tidbits of truth.
That's fairly much nearly a pivot in terms of her narrative. In terms of a pivot from the Fed, are you suggesting then that that's actually not on the cards and that they're going to continue to raise rates while they have the excuse of inflation to do this and drive us into that collapse?
Oh, absolutely. The Fed's going to continue to raise rates. There's no doubt about it. And they're looking for every excuse to continue to do so. So with these bad inflation reports here, these unexpectedly high reports that are coming in, okay, it gives them that excuse to continue to do it. And that's their goal. The goal here is to continue to raise rates, sell the lie to the public, destroy the global economy, destroy demand, and suck the people down with it. Period. The end. That's really what's going on. This is a global takeover, a coordinated effort by central banks to just destroy the world economy and the people with it. They run the financial system. They run the economy. It's not politicians, kings, queens, monarchs, or anything else. They are the ruling body of the world. They're doing what they've set out many, many years ago to do in one particular time in the future to control it all. And that's exactly what they're doing. And it's going to get a lot worse by design. And when we get this implosion here in the debt market, again, this isn't just a financial problem. I want people to understand what this really is. When we get a meltdown here in the debt market, and it's going to happen, it's maybe already has started here. It's going to crater the global stock markets here in the United States. I've said this publicly many times. I expect to see an 80 to an 85% sell-off in the S&P 500 from the all-time high. Wow. And we're talking about a massive drop in global stock market, but it's going to come down to a resource problem and massive inflation here. And it's going to create a life-threatening situation for everyone in the world here. Resources will become scarce. The financial system will lock up. You're going to get a credit freeze, no transactions, everything will stop. And that's eventually what they're leading to. And why? So they can, in a sense, then say, we have a solution for you. Here's what it is here. And it's all going to be about control. So, but they need a massive outcry to, again, like any of the false flag event that they throw on people, they need a big outcry to allow them to exert this kind of control on people, and people are going to beg for it. What they're doing now is making people, as many as they possibly can, dependent on the system, destroy the global economy as fast as they can. And that's exactly what they're doing here. We just heard the Fed minutes this week, and these Fed presidents, most of them were shocked and surprised at the pace of how fast inflation continues to rise, despite their every effort to try to control it. Every effort, really? No. It's unbelievable, but that's what they're doing here. Make people dependent on the system, as many as they possibly can. Bring the system to its knees and then say, we have a solution for you. It's always the same thing: problem, reaction, solution, and that's where we're going.
Now, you said that one of your favorite ways to protect yourself through this is with precious metals. Gold and silver in dollar terms haven't performed that well now over the last while in what you would consider to be a environment where they should perform very strongly. They are in euro terms, in sterling terms, in yen terms, as all other fiat currencies. Is it only a matter of time, do you think, before the dollar price of gold continues to rise?
I believe that and I've been telling people this for a long time, when cash starts to bleed out of the debt market at a fast pace, we're seeing some leave now, and that's causing global bond yields to rise, 10-year yield here in the United States to continue to rise here, getting this knee-jerk reaction into the dollar. The relative dollar strength is obviously a pressure here because, again, like you just alluded to, you have precious metals priced in dollars here. So you get this effect. But what's going to end up happening here, and there's going to be a lag effect when it really starts to get going, when we get a meltdown in the debt market, which is going to happen, it's just a matter of time. Like I said, maybe we're in the early stages now. We need to keep our eyes on that. Well, how do we know the debt market is melting down? Maybe that's a better question. When we start to see 20, 30, 40 basis point jumps higher in, say, the 10-year yield, which is the benchmark, in one day repeatedly, that's when we know we're there. The debt market is now imploding on itself, and that's going to crush the stock market. Cash, it's going to suck everything down with it. Initially, the initial reaction is everything's going to sell off. Okay. Then as cash bleeds out of the debt market, yields start to spike in an uncontrolled fashion. It's going to crush the stock market. And like I said earlier, cash is just going to move. It's going to move into commodities because they're real things. And that's how I can't imagine it going another way. You got the market basically runs in phases. Risk on, meaning cash makes its way into equities. Risk off, it goes into safe haven assets. So we're going to end up seeing that kind of a thing unfold at one time. I'm not surprised at all to see the action that we've seen lately with regard to gold and silver here, understanding that, I mean, look, it's upside down. You have a hard asset, which is deriving value from the derivative. It's upside down. It shouldn't be like that, but it's set up like that on purpose. So, I'm not surprised. I think most people understand that the metals market is rigged like everything else is. And I think the smart money, the wealthy people, central banks themselves are holding this stuff because they realize where we're going at one point here. And I think it's the greatest hedge against where it's eventually going to go. How cash is just going to move from one set of assets into another. And that's, I've been buying this stuff for so long. I started buying silver maybe when it was around $8 or maybe even less than $8. So a long time ago.
Now, do you think we're going to see a gradual grind down, or do you think it'll crash? I mean, one of the things that is obviously of concern is with 10-year over, when it gets over 4%, it's thereabouts. There's 31 trillion in national debt in the States, and there's about 6 trillion of that will roll over this year at significantly higher rates to where it rolled over the last time. That starts to become a big problem. So are we talking a matter of weeks, months, or is this something that'll play out over the next couple of years? Look,
all I can say is watch the benchmark, watch that 10-year yield. Once we start seeing those big jumps, we know that's the time where it's happening here. That's what I look at every day. Before I look at anything else, every morning, I look and see what the 10-year yield is doing. And then I'll go look at stock futures and everything else. When I saw this morning, it popped to like 4.4 pre-market. I was like, okay, this is going to be an interesting day. So just keep your eye on that. Watch the MMRI, see how fast that's rising. It's not, and I've been trying to explain this to people. It's not really the number here. when we're looking, let's say the 10-year yield, it's the pace at which we're getting there. It's how fast it's rising. The debt market is supposed to be a rock. It's supposed to be stable. These yo-yo actions that we've been seeing here in the 10-year yield, more specifically, in bond yields overall, this is not normal. This is a clear sign of a problem, a big problem. Maybe that's why Janet Yellen finally came out of her little cubby hole and said, hey, you know what, there's an issue here. Because see, when it all comes down, at least she can say, well, I warned people, I told people that there's a problem. Oh, after she totally changed their narrative. It's unbelievable, but that's what they do. It's, you can't get the truth out of any of these people. It's just freaking unbelievable. With regard to a crash, okay, just real quick, crashes are never really slow burns. They're very rapid. Why? Because everybody runs for the door at the same time. Let's say, for example, you're looking at a stock XYZ. Stock XYZ starts to plummet. Okay. All of a sudden, people get panicky. Okay, I'm going to sell my shares in stock XYZ. So I'm going to put in a sell order. And I'm going to put my sell. I'm willing to sell it for this much. You put in a market order. Okay, there's two ways to sell an asset: market order or whatever you want.
If there is,
the least price you're going to take, you pay for it.
Sure.
So a limit order or a market order. I'm sorry, my brain's gone soft. So you put in a limit order. Okay, I'm willing to take this. All of a sudden, it doesn't trigger. Okay, I'm going to lower my limit order. Okay, still doesn't sell. I'm going to lower it again. Now I'm going to take anything. So I'm going to put in a market order. Everyone rushes to sell at the same time. The asset plummets, and that's very rapidly. That's how markets work. Everyone runs to the door at the same time. And that's why, you can't sit there. People can't sit and say, okay, it's going to be a slow burn. What we're seeing now in the market is troubling. And the stock market, but it's all based off of what's happening in the debt market. Once the debt market really gets going, forget about it. It's going to melt down the stock market.
So keep an eye on the 10-year, the volatility.
I believe stocks just turned positive in a big way. I don't know why. Let me look at this, because this morning we were down 500 points.
Yes.
Right now, we got, what just happened? Right now, stocks are up 400.
That's great.
Wow. That is kind of interesting. What just happened to flip this around right as we're talking? I have no idea, but I'd love to find out. And I am going to, somebody must have came out and said something. Maybe one of these other banks here just blinked. I don't know, but that's a 1,000-point swing in a matter of 2 hours. That's pretty awesome.
So keep an eye on the 10-year volatility and the rate of change on that as a good indicator as to the rate at which this is starting to unfold. Just before we wrap up here, can you tell our viewers a little bit more about what it is that you do and where we can find you online?
Well, you can find me on my website, traderschoice.net, YouTube. I'm pretty much everywhere. What do? I'm kind of like the watchman. All right. I want people to understand what's going on. I want people to see things for what they actually are. I try to break this down into very simple concepts, because this whole thing is so twisted and so absolutely out of control. It's difficult to get your head around. Even people that go to business school don't understand this stuff. They don't get it. You have to really get in here and understand the dark underside of all this. What's the drivers behind it? What's the goal here of central banks here? Eventually where this is going, to really figure it out. And it took me a long time. I was a skeptic. I didn't buy it. And all of a sudden I had an epiphany. I was like, hold on a minute. I'm going to believe my own eyes. I see what's going on here. So that's it. Look, that's it. My work is all free. I want people to just pay attention to it. Take advantage of things like the MMRI on my website. And together, people like you and me, we're going to make a difference. We're trying, at least, make a difference in the world. And to me, that's the most important thing.
Indeed, it is. What I'm going to do is I'm going to put a link to your website in the show notes in the description below this video. But for now, Gregory Mannarino, thanks for joining us on GoldCore TV today.
Well, thank you for having me.
Thanks to Gregory Mannarino for joining Dave on GoldCore TV. I've no doubt that we will have him back on very soon. Something Gregory said early on in his conversation with Dave felt like an echo of things we often say here on GoldCore TV. And I quote, "Like I've been telling people since day one, bet against the debt, become your own central bank. You do this by holding hard assets. Physical silver, my favorite of all time. And I love gold. I own it." Well, if you fancy following Gregory's advice, then why not head to GoldCore.com, your precious metals experts. We have a brilliant team of people ready to answer any questions you may have, and you'll find even more information on gold and silver bullion than you could ever imagine. And if you want to hear more from Gregory, then check out the show notes below where we have all the details. And whilst you're there, let us know what you thought about the topics Dave and Gregory discussed. What do you think of the current narrative we hear from policymakers and central banks? Do you think the Fed will continue to hike rates? And what about gold and silver prices? Where do you expect to see them go from here? But for now, thank you once again for joining us.